I'm going to talk about Ind AS 37. Ind AS 37 is Provisions, Contingent Assets and Contingent Liability. The main objective of this standard is to have proper recognition, measurement of contingent asset, contingent liability and provisions. The scope of this Ind AS is applicable to all the entities except for the ones which are following other accounting standards and the ones which are entered into through an executive contract, except for the ones which are enormous contracts. Here, executory contracts refer to the contracts where both parties do not perform their obligations or partially perform their obligations. Some of the important definitions in this contract are provisions. Provisions are liabilities uncertain about amount and time. Contingent liabilities are a possible obligations which are arising from the occurrence or the non-occurrence of certain events, which can be its existence can be identified only by these events. Contingent asset, it's a possible asset which is arising from the past events, and it can be identified only by the occurrence or non-occurrence of certain future events. Some of the important things in this are for the recognition of provisions are certain conditions need to be satisfied. Those conditions are there should be a probable outflow of economic benefits, and there should be a present obligation arising from the past events. It needs to be measured reliably. The measurement of this provision can be done based on the estimation. Estimation is done based on the professional judgment of the entity. While considering this, the entity has to also consider different things like evidence, the possible evidence available, the different situations which the management has faced related to this transaction, the uncertainties and the risks which are faced by these transactions, and the expert opinion. As the provisions are made based on estimations, it needs to be reviewed on every balance sheet date. Reviewing based on the evidence available on that date. If you see that there are some evidence more available and the provision needs to be changed, then it needs to be revised on the basis of the evidence. The changes can be based on the discounting rate or based on the estimation. If the difference is due to the discounting rate, then the difference is to be measured as financial cost, and if it's due to the estimation, then it's need to be measured as operational cost. The provision needs to be considered based on the present value of the expense. As time value plays a very important role, we need to consider the discounting factor for making the provisions to be in its present value form. The discounting factor is not mentioned in this provision. Therefore, we need to consider the government bond yield rate for this factor. Contingent liability. Contingent liability should not be recognized in the financial statement as they do not satisfy the definition of liability. Contingent liability should be disclosed in the financial statement as notes to accounts. These needs to be assessed on a regular basis, and when it is probable that there is an outflow of economic benefit, a provision needs to be created. This is the recognition of contingent liability. Measurement of contingent liability. As the provisions are all estimated, similarly contingent liability is also estimated, and a professional judgment is required by the entity to do the provided estimation. The entities are also supposed to look into factors like evidences, the risk and uncertainties, the export report, etc. Contingent asset. Contingent asset needs to be recognized only as a disclosure in the financial statement only if the inflow is probable. And when there is a virtual certainty of the inflow, then it needs to be recognized as an asset, and it's no more a contingent asset. Measurement of contingent assets is similar to that of contingent liability. The same like how we consider the contingent liability to be an estimation, contingent assets are also estimations. Reimbursements. Reimbursements are expense which we expect to be given to us after we settle an obligation. The reimbursements can be an asset when it is virtually certain that we would get back the money. When these are considered to be an asset, these need to be shown in the financial statement as a different assets. These need not be deducted from the provisions, and the assets are not supposed to be more than the provisions created. But in the profit and loss account, we show the net off of the provisions. Enormous contracts. Enormous contracts are contracts where the cost incurred for the obligation is more than the returns what we expect from it. We have to create provisions for this too. The provisions are created based on the least of the following, which is the cost incurred for occurring for the completion of the obligation, or the cost or the penalty occurred for not completing the obligations. Next is the restructuring. Restructuring is a process which is done by the management, which is controlled by the management. Even the provisions need to be created for this restructuring. Restructuring provisions are created based on only the expenses for which the restructuring is occurred, and no future expenses need to be considered while creating these provisions. Future operating losses. These are some things which are taking place in the future. Therefore, these losses need not have to be considered for creating provisions, as they do not satisfy the conditions of liability. This is one of the illustration for Ind AS 37. X Limited has taken a building on lease for 15 years. As per the lease agreement, lease has obligations to restore the building to the original condition at the end of the lease term. Alternatively, pay the estimated cost of restoring to the building owner. Should the entity create a provision? If yes, when should the provision be created? Provision needs to be recognized when there is a present obligation, outflow of future economic benefit, and it should be measurable reliably. In the present situation, the present obligation is only created only when the building is modified or is being damaged. Therefore, only when this situation takes place, a provision needs to be created. Otherwise, there is no provision need to be created in this situation.